Okay, hello ladies and gentlemen, and welcome to this webinar brought to you by FX Street. My name is James Chen. I am the Director of Technical Research and Education at FXDD, and I'm glad to see everyone here. Hello everyone. And today I'm going to be providing you, as I do every month, a webinar on some technical perspective in terms of an approach or strategy that I use. And today is no different. Today I will be talking about candlesticks and how to really incorporate candlesticks into your trading as one of the tools that you should very well be using in your trading arsenal. So let's get started real quick. As always, just before we get started, I would like to provide just a quick risk disclaimer. That foreign exchange trading carries a high level of risk that may not be suitable for all investors, and leverage creates additional risk and loss exposure. Do not invest money that you cannot afford to lose. Educate yourself on the risks associated with foreign exchange trading and seek advice from an independent. Okay. So today, as I mentioned, I will be talking about combining candlesticks with Western technical analysis. I've done a couple of these webinars, but a long time ago on FX Street, and today I want to reintroduce this topic because it is a very important topic, and I use candlesticks on a daily basis in my trading. Of course, as I'll mention to you later, not as my primary method of trading, but as a very important confirming tool or warning tool, especially for turns in the market. So I'll talk about that. I'll pretty much go from beginning to end on that as I see it and how I use them in the forex market. And then I'm going to show you some examples on the charts. Okay, so let's get started. Before I get started, as always, just a quick introduction to myself in case you're not familiar with who I am or what I do. My name again is James Chen. I am the Director of Technical Research and Education at FXDD. We are a global foreign exchange broker, and I've been an active forex trader pretty much since the inception of retail forex, using primarily technical analysis. Prior to the retail forex market opening up, which was pretty much around year 2000. I also traded equities and futures, but ever since retail forex came out, I've been concentrated pretty much exclusively on the forex market. I'm a chartered market technician, or CMT, which is a designation for technical analysts. I'm also a registered commodity trading advisor, or CTA, registered here in the U.S. with the National Futures Association. I publish daily and intraday forex technical analysis that you'll be able to find on FXDD as well as many other places, fxstreet.com as well. And I've authored numerous articles in such publications as Forbes, Futures Magazine, Technical Analysis, Stocks and Commodities Magazine, and SFO Magazine. And my next article is actually coming out just in a few days on the February issue of SFO Magazine. It's going to be concentrated on one of my pullback strategies. So you might want to take a look at that. It's a free magazine online. You go to sfomag.com and you can go ahead and view a copy there. I'm also quoted on a regular basis by Reuters News, Dow Jones, Associated Press, and International Herald Tribune, and I'm the author of 2 books, Essentials of Foreign Exchange Trading and Essentials of Technical Analysis for Financial Markets, both of which in the past couple of years were published by John Wiley & Sons. And also with fxstreet.com, I did a DVD set. Now, just a quick overview of candlesticks and Western technical analysis and what my approach is. Now, I've done a lot of work with Steve Nissen in the past, and Steve Nissen is the man who pretty much brought Japanese candlestick analysis over to the West from Japan. And what he did was he translated. Well, he didn't actually translate them himself, but he had these books and documents translated into English, and he really introduced candlesticks to the Western world from Japan. Now, candlesticks work for all financial markets, and when I say candlesticks, I mean candlestick analysis, the patterns, etc., of inherent in the candles. they work for all financial markets, but they're slightly different for the forex market because of such characteristics like the 24-hour market as well as the relative lack of gaps. So as a result of this unique subset of characteristics, there is a subset of candle patterns that forex traders primarily focus on, and I'm going to be talking about that today. Now, pretty much everyone who talks about candlesticks, including Steve Nissen, advocate using candles to be confirmed or to confirm Western technical analysis, and not as the primary means of making trading decisions. And therefore, this webinar and whenever I talk about candlesticks, I talk about combining the candlesticks with other aspects of your technical analysis, and not to be, just because you see a hammer or a shooting star or a doji or what have you, not to take a trade based on that alone, but to combine it with other aspects of your trading. Now, what I find candlesticks are best at, and you may or may not agree, but what I find they're best at is confirming or warning of potential reversals. Okay, and preferably within a trend, because as many of you may know, I am primarily a trend-following trader. So, what I'm looking for most of the time are potential reversals to be shown by the candlesticks. Now, there are a lot of, candlestick patterns. There are a ton of candlestick patterns. If you've read Steve Nissen's book, lots of different candlestick patterns there. However, and some of them are continuation patterns and, gap patterns, etc. However, what I found of most use in my trading, my forex trading, have been those candlesticks that confirm or warn of potential reversals. And when you combine this with Western technical analysis, especially support and resistance, then this combination can be powerful. And I'm going to talk a little bit about confluence. And I talk about that a lot because it's very, very important. Confluence is just a coming together of different aspects of your analysis and trading to help strengthen the rationale for getting into a trade. So one key point here is that utilizing candlesticks instead of bars offers no disadvantage. You have the same thing in bars and candles in terms of the basic information that's provided. You have the open, you have the high, the low, and the close. Okay, OHLC, open, high, low, close. You have the same information once again for bars as you do it with candlesticks. However, the advantages of looking at candles over bars, there are no disadvantages. But the advantages are that you have a clearer visual representation of price action, and that's really what we as analysts and traders like to, we want the charts to tell us a story, and that's basically what the candlesticks do much better than the bars. So, and especially the struggle between bulls and bears. Each candlestick tells a story in that respect. Okay, and the combination of candlesticks and Western technical analysis can be used on all time frames. I get that question a lot. I tend to use the longer time frames in my analysis and my trading, but this combination can be used on very short-term charts as well. Elements of Western technical analysis that are used with candlesticks center, as I mentioned, on support and resistance, including horizontal support and resistance, trend lines, which are also basically support and resistance, chart patterns, which are also basically support and resistance, fibs, support and resistance, pivots, also, bands, when I talk about bands, volatility bands. Volatility bands are not, volatility bands like the Bollinger Bands, they're not necessarily always used as support and resistance, but they can be, and as well as oscillators. Okay, now the key point here, and I hope that you take away from this, is that long shadows, and when I talk about shadows, I'm going to give you a structure of a candlestick in a second, but long shadows represent price rejection, price failure, and they forewarn of potential turns in the market. Okay, so once again, the key point here, and that's why I'm looking for candlesticks to show me potential turns or reversals in the market, because long shadows represent price rejection, price failure, and they forewarn of potential turns in the market. Very, very important. Okay, let's get started real quick. Now, before I, get to the main part of this presentation, just a very, very quick structure of candlesticks and bars. In case any of you, are not familiar, and most of you should be, but just a quick overview. A bar is simply, you've got on the left-hand side, you got the open, right-hand side, you got the close. In between, you got price action that occurred within that period, and you got the high and the low represented by the extremes of the vertical line. Okay, so once again, open on the left, close on the right, and then extremes of high and low in between. Okay, candlestick gives the same information in a slightly different manner and a much more visual manner. So with candlestick, you have this body in the middle. Okay, and then you've got wicks or shadows above and below. Whatever you want to call them, you call them shadows or wicks, but they represent the wicks and shadows. Let's just call them wicks. They represent the highs and the lows. Okay, so same thing as the vertical line on the bar. Now, in between, you have the body, and the body is very important. That's what gives the main visual representation. The body is represented by a color. If it's a bullish candle, which means that the net movement, the net price action was up. If it's a bullish candle, that body is usually either white or green. Okay. Now, if it's a bearish candle, which means the net movement of price action within that candle is down, then that color is usually black or red. Okay. And the way I have it, and I'll show you in a minute on my charts, is I have green candles as bullish candles, and then red candles as the bearish candles. Okay, so that's the basic structure of a bar and candlestick. And once again, same basic information, just different visual representation. Okay, the high probability forex candle patterns that I pay most attention to, and this is a little bit in order of importance. At least the very first two are my most important ones. The hammers and the shooting stars. Okay, what is a hammer? What is a shooting star? I'll get to that in a minute. And then you have others like hanging men, inverted hammers, doji, all kinds of doji, spinning tops, and you have engulfing patterns and harami. And these are, again, there are a ton of different, candlestick patterns out there, but these are the ones that I pay most attention to, and especially the first two. Okay, hammers and shooting stars. And we'll get to that in a second. Okay, now, what are hammers and shooting stars? Okay, here on the right-hand side, the single candlestick patterns. A hammer is simply after a down run, and this has to occur after a down run, after a general down run or downtrend. Okay, you have this last candle, which is called a hammer candle. And what is a hammer candle? Oops, let me go back to my slides there. What is a hammer candle? It's simply a candle that shows price rejection or price failure near the lows. Okay, so right here we have a down run, and then we have a small upper body, long lower wick. What does that mean? Price action tried on this third candle here. It tried to move down to continue that down run, but it failed. Okay, and if this occurs, and this is what I'm really talking about when I say combining candlesticks with Western technical analysis. If this occurs right around support, a key support area, then you have a very strong potential opportunity to play a turn there, okay? A turn up in this case. So once again, a hammer, we talk about hammering out, a low. Here we have a small upper body, long lower wick, price rejection, price failure near the lows. Shooting star is just the opposite. This is after an up run, okay? And after an uptrend or an up run, we have the third candle here. It could be the fourth candle, fifth candle, 10th candle, whatever, okay? But this is just to illustrate it. We have a small lower body, a long upper wick. What does that talk about? That talks about this last candle here called the shooting star candle tried to extend this up run or this uptrend, but it failed near the highs. It got rejected near the highs. And if this occurs around resistance, then that's a very strong signal for a potential turn opportunity. A turn down in this case for the shooting star. Okay, so hammers and shooting stars, my most important by far types of candlesticks. Now, we also have doji over here on the left. A doji is simply a candlestick that opened and closed at or near the same price level. Okay, and what does that talk about? Potential indecision in the market. It's a pretty good candlestick pattern, but not nearly as strong, I think, in my mind. And it doesn't give as strong a story as the hammer shooting star. But anyway, we have a doji here. It talks about potential indecision in the market, possible turn in the market as well. Spinning top, same type of idea as the doji. We have a long upper wick, long lower wick, and a small body in between. Also indecision in the market. Oftentimes you'll see spinning tops and doji occur in a sequence or repeated, maybe 4 or 5 different doji patterns or spinning tops in a row. And at that point, that looks, those types of series look very much like there's a lot of indecision in the market and potential turn in the market as well. Where, for example, after an uprun, you have a series of doji or a series of spinning tops. Usually it's spinning tops. Then at that point, you have indecision as to whether this uprun, can continue or not. And oftentimes you'll see turns, from there. Okay, so hanging man, inverted hammers, the same type of thing. A hanging man, although not nearly as strong as a shooting star, we have a small upper body here, long lower wick, also indecision in the market. Not nearly as strong as a shooting star, but a potential turn signal as well. Turn to the downside in this case. Inverted hammer, not nearly as strong as the hammer candle, but also a potential reversal. A small lower body, long upper wick, potential indecision in the market, potential turn to the upside in this case. But once again, not nearly as strong as the hammer and the shooting stars. Okay. Just a couple more, and then I'll get to my charts. Multiple candle patterns include the bullish engulfing, bearish engulfing, and harami. Bullish engulfing is telling me a very strong story. Okay, so I have a small body here, followed by a long bullish body. Okay, and this long bullish body is telling me that the bulls at this point are winning out over the bears, and oftentimes these engulfing patterns can be used as potential turn signals as well. Okay, so bearish engulfing, same thing as bullish engulfing, just in opposite fashion. You got a small upper body. A small bullish body here, and then a long bearish body following it, which means that the bears are winning out against the bulls, and potential turn signal as well. So these are very important. Harami is sort of the opposite of the engulfing pattern. You have the big candle first, and then the little candle. Also in potential indecision in the market. Harami for me are not nearly as strong as engulfing patterns for many reasons. Okay, because the engulfing patterns are telling me, a stronger story. Much like the hammers and shooting stars are telling me a stronger story than the inverted hammer and hanging man, etc. Okay. Let's talk here about Western technical factors. Len, great question there. Oops, having a little difficulties here. Okay, Len, great question. Is harami same thing as an inside bar? Yes. Okay, it is. It's just a different name. So very good point right there, yes. Western technical factors. Previously visited support or resistance levels. That is my strongest Western technical factor. Okay. Let's say, on Euro, if it's 130, a strong support resistance level. Those are probably the most important Western technical factors that when used in conjunction with the candlesticks. We have trend lines. This is diagonal support or resistance. Okay. We have Fibonacci levels, also support and resistance, especially the key numbers like the 38.2, 50, 61.8 on the retracements, and then we also have the extensions, etc. Pivot points, if you use them, they're also just another representation of support and resistance. Western reversal patterns, including double, triple, tops and bottoms, head and shoulders, etc. Those can be used also in conjunction with the candlesticks to give you more strength in terms of rationale for your trade. Okay, question here. Trying trader on smaller time frames, i.e. hourly, there can be a lot of congestion in several different candles that can be confusing. What do you use and how do you know how to trigger your trade? Great question there. Really, really good question, trying trader. Once again, on an hourly chart, yes, there's lots of noise, lots of congestion, and how do you, and you know, you have a bunch of different candlesticks that are showing you different things. Now, that's exactly why I will never take a trade based upon a candlestick alone, okay? A candlestick pattern alone. That's why I'm looking at support and resistance. Okay, let's say I have a support level right here, okay? And right after price action came down and hit that support level, okay, it forms a hammer candle. What is this telling me? That support is a known entity in the market. Traders are looking at that support, and you know, the market as a whole is telling me that support is important. And at that point, will I get into a trade based upon just a hammer candle at support? Absolutely not. I have other triggers to get into my trade. But that for me is a very strong indication that perhaps, you know, there could be a turn to the upside. And then usually when I get into trades, I get into trades based upon breakouts. Okay, so let's say that there is, you know, price action goes down to a support level and it forms a hammer candle. Most of the time, what I'm going to be looking for is some type of breakout play. So if it, you know, if it goes to the upside, then I'm looking for the momentum on a breakout to confirm both that support level as well as that hammer candle. I'll show you a little bit more in a second on my charts. But great question there. So you know, other Western technical factors include the double, triple, you know, the reversal patterns. The Western reversal patterns. Bollinger Bands also can be used oftentimes as a support and resistance, although not always. And then oscillators. How do I use oscillators? I'll show you in a minute, but most of the time, you know, the way I use oscillators is to confirm turns in the market. So when I have, let's say, once again, price action goes down to a key support level, it forms a hammer candle. At the same time, my slow stochastics is emerging up from oversold, okay, crosses above oversold. That for me is a confluence of three different factors telling me that, you know, my directional bias is to the upside at this point, is in the direction of a turn, okay? Okay, very quickly before I get to my charts. The question here, Roberto, pattern candlestick with Heikinashi. Okay, Heikinashi is a completely different kind of candle altogether. Okay, completely different, and it's not based on you know, when you look at a Heikinashi chart, you'll see that it's not representing the correct real-time price. What it's doing is the close is based upon an average. Okay, so Heikinashis are completely different, and I don't use you know, I used to look at them a little bit, but they're you know, you cannot really use these candlestick patterns I'm talking about here on a Heikinashi chart. It's mostly, you know, these candlestick patterns are used, you know, primarily on the regular candlestick charts. Okay, yes, there is distortion in the Heikinashi charts. Okay, they're good at showing trend, but there's distortion there. Trying trader, how do you pick quality support and resistance levels, and would you use these counter trends? Okay, I'll talk about that in a second. Heikinashi may be good for a 1-minute scalp in a range. Yes, Harley. You know, the thing about Heikinashi charts are that they are good at showing trend, but it's sort of a, you know, it's sort of a misleading representation of trend. Okay, so let's talk about Confluence real quick before I get to my chart. Okay, Confluence is, you know, I've talked about this many times before. Basically what it is, you know, it's a simple and logical, you know, addition to your trading tools. And basically what are you doing with, when you're looking for Confluence? It's about finding multiple technical confirmations. So as I mentioned before, when you have a strong support level, when you have a hammer candle there too, when you also have the oscillator turning up from oversold, that is a confluence to me. let's say it also, that support level also occurs at a 38.2% fib retracement, okay? That's even stronger. So, I'm not saying that you should be paralyzed, paralysis by analysis here, but at the same time, it's always better to have stronger rationale for getting into any type of trade. So, coinciding technical factors, that collectively reinforce each other are potentially high probability opportunities, and that's one of my key, philosophies for trading. So when you have many factors that are telling you that, yes, this is the direction that it looks like it's going, then at that point, you're going to have a higher probability, stronger directional bias. So it can be any combination of two or more technical factors. Patience is key. Self-fulfilling prophecy, all that. The key tools that I use for confluence. And as I mentioned here, because this is a webinar on candlesticks, candlesticks are very, very key, candlestick patterns here. But even more important than that are key support levels and resistance levels, trend lines, Fibonacci pivot points, bar chart patterns, moving averages, oscillators, volatility indicators, etc. Okay. Let's go to the charts. Okay, let's go to the charts real quick. Okay, and this is just a historical chart. Let me take a look here. This is a daily chart. I got a few 4-hour charts, daily charts, etc. But once again, this all works on the same general principles. Let me show my chart again. Okay, so hopefully you guys can see that. This is a euro-dollar daily chart. I just made circles here for where I saw that, perhaps there were some good opportunities that were combined with lesser technical analysis. Now, up here, you take a look up here, and this is what I was talking about before. Okay, hopefully you can see this right here. This is what I was talking about before. When you have a series of spinning tops, like you have here, okay? We have several different spinning tops here. We have a big run to the upside, okay, and then a shorter term up run, and then we have spinning tops here, a series of spinning tops. What is that telling you? What story is that telling you? I don't care what you call it. You don't have to call it a spinning top. You call it whatever you want. But more importantly than what the name is what story are these candlesticks telling you, okay? And in this case, it happened to work in terms of, you have a series of candlesticks that's telling you that there's indecision, okay? And there's a potential turn, and then here you have this turn to the downside. So that was marked pretty well there, okay? Let me show you actually some other charts I have here. Okay, this is a pound dollar chart, okay? Now, just a couple of good examples of where turns in the market were accentuated, through the use of candlesticks is right here. You have right here a very strong candlestick pattern that occurs right around support and support resistance. Support resistance being at this 158 level, okay, 158 area on pound dollar. This is a daily chart. Pound dollar. So 158 area, you have this move to the downside, and then you have this very strong, hammer candle here, which is a very small upper body, long lower wick. Yeah, it's got a little upper wick too, but this can be called, a spinning top or a hammer. Again, I don't care what you call it, but we have this long wick here that's telling us, and a small body telling us that there's indecision, that we get rejected right here near the lows, okay, and the lows being right around the 158 level, as well as this is also 38.2% Fibonacci retracement. So there we have a confluence, a very strong confluence of support right where we have this hammer candle, okay, and this occurs in many different places. We take a look here, okay, so right here we have this very nice. This is right at resistance up here. We have this very nice shooting star candle. So move to the upside, long upper wick, okay, rejection near resistance, rejection near the highs, and then a move to the downside. It doesn't occur right away. It occurs after a few candles, but then again, that's what we're looking for. Now, the question was, how do you get into a trade? Okay, if we see confluence here, and we have confluence right here that was accentuated with, right here at resistance, we have this shooting star candle, and then we have this turn down from overbought on stochastics. Okay, across below overbought on stochastics, and that's a pretty key confluence as well. How would I get into this type of trade? It could be several different ways, but you could have some type of a trend line there, or what have you, just like I have right here. Okay, this type of a trend line is, again, the way I usually get into trades is off of some type of a breakout. So here we have this, you could call this a wedge or whatever you want to call it. Okay, move to the upside, and then we got some nice candlestick patterns here, and the break to the downside, and that is, that is a potential trigger to get into trade on a breakdown. Okay, so hopefully that makes sense there. Let me take a look. So right here, if you take a look right here, we have a nice long candlestick. Okay, this is established support right here. Okay, yeah, this went down and broke down right over here. Okay, it broke down below this support at around 153.40. Okay, however, this occurring right around support, this very nice long lower wick on the daily chart is showing us that, perhaps there is rejection near the lows, and this is, basically a double bottom, although this went down, further than that, but it didn't, it didn't close below that. Basically a double bottom type of formation, and double bottom being a Western technical pattern, and this hammer being a candlestick pattern, and put them together and a possibility for a bias to the upside on a turn. Okay. Here, this is a very nice, I didn't circle this, but this is a very nice spinning top right here. Okay, very nice one. Actually, two spinning tops in a row. Okay, so we have a down move, lots of indecision, and it moves down, right around, a little bit lower, but if you take the low right there, it's right around that support right there, and then you've got a series of spinning tops, and then two spinning tops, and then a move to the upside. Okay, let me show you a couple more here. Let me take a look. Okay, this is on Aussie dollar. Okay, this was a very good one as well, right at support. Okay, also this was a 161.8% Fibonacci extension. Okay, 161.8% Fibonacci extension. Plus, it was a prior support level at 94 level on Aussie dollar. Okay, and then right here we also had a nice little hammer candle here. Okay, also, a few candles after that hammer candle, we had a breakout above oversold. So that right there is, for me, a confluence of different factors telling me, there might be a turn here. Okay, and then how do I confirm that turn? When it actually starts to go up, and then once again, I'm looking for a breakout. If a breakout occurs, let's say I draw this trend line here, okay, or some type of a breakout, let's say above right here, okay. When I'm looking for a breakout, why am I looking for a breakout? After I see a confluence of different factors telling me that it looks like there's going to be a turn here, why am I looking for a breakout? Well, a breakout is yet another confluence factor, because what does a breakout represent? If there's a breakout of some resistance level to the upside after this hammer candle occurs, what that's telling me is that momentum, short-term momentum, is also in the direction, in this case to the upside. Because, I have all these indications telling me it's going to go to the upside, okay? 3 different indications. Breakout is the 4th indication, because that's telling me there's momentum to the upside. A breakout is simply a representation of short-term momentum, okay? So hopefully that makes sense. Let me take a look here. Okay, one thing I wanted to show you is this type of thing right here. This is on EURUSD. Let's see if there are any questions here. Okay, there are a lot of questions here. I'll try to get to the towards the end, but if you take a look, one particular candle I want to show you. Okay, now in the direction of a trend, you'll often times have this type of candle here. Okay, and what is this? But this is a inverted hammer. Okay, right here. This inverted hammer. Okay, so we have a down run. Now it doesn't matter what you call it. Okay, once again, it doesn't matter what you call it. But what story is this telling you? Well, we have a down run right here, okay? And then we see an attempt at a pullback, okay? So price action went up there. It failed right around here, 142.50, which was support resistance, okay? So it failed. That pullback failed there. So once again, long wicks represent price rejection, price failure. So it attempted a pullback right there. And then it moved to the downside from there because it failed, and this occurred right around resistance. Okay, so I just want to show you that. Let me take a look here. Yeah, same type of thing here. We have a hammer candle right around support. Okay, support resistance 140 level on euro dollar. Okay, this is sort of back in the day. Here's another example here. During this the current downtrend on euro dollar. We see that this candle here is representing a failure to move further to pull back. Okay, so this is here we have it occur right at this low right here, and it went all the way up. It tried to breach 132 at this point, but again, long wick to the upside represents failure or rejection to move further to the upside and a possibility for continuation, which does occur. And by the way, I am still bearish on euro dollar. Overall. Okay, so let's see. All right, we don't want to look at these spikes on dollar yen, but okay. And one thing here, let me take a look here. Okay, here are just some more. This is like a nice little candle there. There's a nice little candle there. Hammer candle. But on dollar Canada, I just wanted to show you a perfect rendition of a chart pattern. So here you have, this is a long time ago, but I always show this because it just makes a lot of sense. If you take a look here, we have a high established here, okay? And then we had price action try to go up here. This is sort of a Harami pattern here, okay? So, price action tried to move up to the high again. It gets rejection, and then it gets rejected, and then it goes down, comes back up. What do we have here but a really great shooting star candle, okay? Small lower body, long upper wick, occurs right at established resistance. This is about as perfect as you could get, and then a move to the downside from there. It turns to the downside, and this was, this was just a really good candle there. Okay, and then very importantly, we have established resistance right here, and then what happens here at established resistance? Yet another candlestick pattern, and this is a bearish engulfing pattern. Not a great one, but a bearish engulfing pattern. So I'm always looking for clues, okay? They could be strong clues, they could be weak clues. Of course, strong clues are better. This is not a great engulfing pattern here. It's barely an engulfing pattern, but it's yet another clue when I'm looking for confluence, okay? And then, most importantly, this occurs right at resistance. Right at strong resistance, and then at that point, I'm looking for some type of a breakout, whether it be a counter trend line here, or a break below some support resistance level, or what have you, to possibly get into that type of trade. Okay, let's see if any questions here. What is, I think I showed a bunch of charts and I wasn't looking at the questions, but apologize for that. Where was your entry? Wait, is the length of, okay, Solman, is the length of the hammer tail important? Yes. Great question. Is the length of the hammer tail important? It is absolutely important, because the longer the tail, or you call it a tail, but the longer the wick or the shadow, the more in terms of the struggle the rejection of the price failure, okay? So a hammer candle that has a really long lower wick is really telling us that it got rejected in a bad way. So relatively speaking, yeah, longer wicks and longer shadows are stronger. James, Len asks, I look for an immediate large candle the opposite direction which shows some momentum. Immediate large candle the opposite direction which shows some momentum. I think if you're talking about an engulfing pattern, I think that may work. Yeah, absolutely, I agree. James, candlestick from FXCM are different FXDD, both MetaTrader. Okay, that's a good question as well, Roberto. Why are the candlesticks different? Well, it depends. If it's on a daily chart, they might be different simply because we may have different opening and closing times. Okay, and that may affect the candlesticks. On an hourly chart, on an hourly chart or a 30-minute chart or what have you, they should be pretty much the same. Okay. You look for trying trader when looking at potential good trade setup. Is there anything that you look for to prevent you taking the trade? Okay, when looking at a potential good trade setup, is there anything that you look for to prevent you from taking the trade? To prevent me from taking a trade, if I have confluence, if I have everything's lining up and I have a strong directional bias, what would prevent me from taking a trade? Well, one example is if I'm looking for a breakout, and then on that breakout is a huge candle, that may skew my risk-reward ratio, because if the breakout candle is very big, okay, I'm usually not going to get in on a breakout candle. I'm going to get in on the candle afterwards. Okay, and if that breakout candle is very big, that means, let's say if it's a break to the upside, then at that point, that will skew my risk-reward ratio because I'm getting in too high. Okay, so that may prevent me from taking a trade. Okay, how do you know the trend has changed so you can stay with the direction of the trend? That's a whole nother story, trying trader. How do you know the trend has changed so you can stay with the direction of the trend? You use the tools at your disposal. Usually what I use are trend lines and moving averages. Okay, Alex, how do you enter and where's the stop loss? Well, again, what I usually do is the way I enter is usually on a breakout. After I see that there's I have strong rationale to get into a trade, I have a strong directional bias, I have strong confluence, I will get into a trade usually based upon a breakout. And again, the breakout will be on usually on a counter trend trend line or on a breakout of some resistance or support level. How do I get into that trade? I usually wait for the breakout to occur and then for the next candle to surpass the higher low of the breakout candle. And then where do I place my stop loss? Usually on, it's very straightforward for me, usually on the other side of the break. Okay, I mean, that's in a nutshell. That's in a nutshell. Sanjay, do you use fibs? Yes, I do. And if you'll notice, I did use I have several Fibonacci levels up there. Kim, what time frame does a candle work most? Again, it works on all time frames depending on what you like to trade. I was showing you daily charts because that's usually what I'm looking at more often than the shorter term charts. But if you're looking at shorter term charts, that's fine. There may be a lot of noise on the shorter term charts. That's why I generally like to stick to the longer term charts. But these candlestick patterns work on every time frame. Trying trader, how do you pick your targets? Great question there. How do I pick my targets? I pick my targets usually based on risk-reward ratio or support and resistance levels, okay, or a combination of those. So, if I see if there's a breakout and there's a further resistance level, I may choose that as my target, but it needs to conform to my risk-reward ratio. And oftentimes, I will set targets based upon my risk-reward ratio alone. That way, I can control, my risk and my reward. Harley, James, do you also use complicated candle formations, or just keep it simple? No, yes, absolutely, I keep it simple. No, I don't. I do not use complicated candle formations. I have enough tools in my toolbox that I don't need to go into those really complicated ones. And although I was forced to learn all that stuff by taking the chartered market technician exams, but I'm not going to be, I'm going to be using what's useful. Okay, so for me, what's useful are the simple ones. Great. Okay, great. So I think that's pretty much it. And I went over time a little bit, but I would like to thank all of you for your time. If you have any questions, please email me at Chen. Let me write this down here. Okay. Let me see here. fxdd.com. Please feel free to email me at jchen@fxdd.com if you have any questions. I believe this was recorded, so you can go on to FX Street, my page on FX Street, and you could see the recording. And I would like to thank all of you for your time today. Thank you very much.